recap on GJ shorts from yesterday, and I'm going to talk a little bit about inducement and lower time frame entries and how to kind of combine the two. Now, I know everyone's kind of excited about the lower time frame sauce, but unless you got the higher time frame narrative behind it, it'll ultimately fail. It kind of works, but it won't if you're not on the right side of the market. And what I mean by that is I always start out on the higher time frame. So with GJ, we're obviously very bearish, and as long as we don't close above this on the daily, where my daily line is, we stay bearish on the daily. That's our daily low. To me, that's a weak low, and we'll likely run it. So that's kind of the daily perspective. 4 hours, obviously bearish as well. And from a 4 hour perspective, we're obviously still looking to run this. However, I don't know if we'll do it in a clean push or we'll see a bit of a retracement. My imagination would tell me there's some sort of retracement coming, as this is our fib for the whole daily range, and we've gone past 50% of it. So a pullback is more and more likely the deeper we go. So I don't know, like we could definitely come back and mitigate a supply here, 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 and continue down. But ultimately, the target is to run this low. So yeah, that's our 4 hour analysis. Obviously bearish as well. On the 15 minute now, I want to talk about what OBs I look at and why. So when I got to the charts, I think I got to the charts around 4:30, so that would have been 12:30 London time. So what we look at is obviously 15 is also bearish. What I start looking at is where's the inducement line, and what I mean by that is where's the money lane. So if we look right here, we have sort of equal highs here. To me, that's just liquidity built to be run, or also known as inducement. And I look for order blocks essentially that have money sitting under it. So this to me would be a valid OB. And I'm going to talk a little bit after this, at the end of this video, to how to tell which order blocks are going to get run. And I'll show you guys examples. And basically, the order blocks that generally don't hold are the ones that don't have inducement or the inducement's been taken. But stay tuned for that. I will totally discuss that in detail because I know a lot of guys aren't sure which OBs to use and which ones are going to hold and which ones won't. So what we had here was we had an OB here, very valid. I came to the charts around this time. Obviously, when you first see this, you don't know if this OB is going to hold or if it's going to this one or this one. So what I like to do is look for a change of character and a flip. And since we're bearish, what we're looking for is a sweep of the highs and a sweep of the lows in the form of demand failure. So what that looks like on the lower time frame is, so this is us tapping into the OB. I got to the chart around here, and ultimately this was our supply that we tapped into. Obviously, you could just take a risk entry on the supply. That's totally up to you, but what usually ends up happening is you end up having a much larger stop loss. So what I look for here is we want a sweep of the highs and a sweep of the lows. When I say a sweep of the highs and sweep of the lows, I want the highs of the last demand swept. So the last demand to me that matters is the sell to buy wicks in here. And yes, that is a demand. Just to show you guys what it looks like. And I'm going to go into that in a little more detail as well, but let's see if we can actually show you guys the demand if it lets me. I don't know how far back the 5 second goes, but it usually lets me. Oh, there we are. Okay, so this is what we look like on the seconds, the exact same things I showed you guys on the minutes. So if we look here, the sell to buy wicks I pulled, Your white candle here would be your inside bar or your last demand that gave us this high. And what we ended up getting was a large wick from GJ. So the wick came when this white candle came down. And what that is we're looking to sweep these highs, which is your demand. And then we're looking to sweep the lows of this demand. So ultimately, we're looking for this demand to fail and continue with the trend. So let's see if I can find it again. Where are we here? I have been trying to figure this out on my Windows computer, but I got a widescreen plugged into my laptop, and every time I try to record, there's some discrepancies. The screen kind of starts going blurry, or it kind of flickers on and off, so I'm still working on that. But that'll kind of clean the charts up a bit too, as soon as I get that figured out. Anyway, back to this. So we swept the highs here. We swept the lows when this move came down. So this told us here demand failed, supply took control, 15 minutes supply is holding, and this is likely a good sell zone for us. Like I said, you guys can't take a risk entry on that. I look for demand to fail, and then I ultimately look for a confirmation entry. So what you have here is a change of character because the demand's no longer holding. We've swept the highs, we've swept the lows, and we have a flip here as supply took control when this demand failed. So we came back in, we tapped into this zone, and ultimately what I look to run is the low, which uh, which was this low. It was the 15-minute low at the time with trend. So I was just looking to run that without any greed. And that was a 12 and a half hour. If you didn't get in on the first entry, there was a couple more chances to scale in. And ultimately, that's how I framed that trade up. But on the 15, you can see there was clean inducement here. This is a very good OB to me. And as you can see, we ran the lows. That would be my first target. We then again, I actually tried buying this back up. I ended up breaking even on this. And I was actually trying to buy it back up to this OB and this OB. And again, we have sell to buy wicks here, sell to buy wicks here. We reacted off the first one, which, it went far enough. I got to break even on it. But let's see if I can actually find this too. And it was the same thing here. This was a 15 demand we tapped into here. I didn't mark it out. We had a supply fail here. So you swept the lows of this supply, you swept the highs. The move originated from this area. So you would have pulled this as your demand. I bought up off that. Like I said, I was counting on it to make it to at least here and hopefully here. However, the first sell to buy wick supply ended up holding, which is this area. And if you're ever wondering what sell to buy wicks look like, if you look on the lower time frame, you can see they're clearly supply zones or demand zones, depending which way you're going. But yeah, that's kind of my trade idea for going back. Um, I'll talk I'll talk about this a little more too here. And this was GJ today. Now today we kinda it wasn't my favorite setup. I didn't actually get tagged on it, but the setup I was looking for was the exact same. So we have our supply here, and we ended up tapping into it somewhere. I think where is it? So we ended up tapping into it here. We had a demand zone fail here. Ultimately, you could have tried getting in on here, which is I think where I had my order. It never did come back, and that's just the nature of the game. Um, and yeah, it just didn't work out today, which is totally fine. I'll show you guys another example on Euro USD, and again, it was the same thing. I'll show yesterday I ended up taking a buy right from here, right from the bottom. And at the time we were still bullish because this was my last structure that made our last high. It's not the greatest structure, but it is structure. It's also our last demand that put in our last high. And I'll talk about that in a sec too. Again, you guys can see inducement. We sweep the inducement, continuation, inducement, we sweep the inducement, continuation. If you really pay attention, we drop inducement here, we sweep it, continuation. We drop inducement here, we sweep it, continuation. That was actually a short I took today. So just to look at this in more detail, the way this buy worked for me, since I was looking to go with trend, which was bullish at the time. I'm not going to bother switching on the seconds right now, but I think it was on either the 30-second or the 15. This was the demand zone we tapped into. We are bullish, so our first supply was here. Again, it's cleaner on the seconds. We ended up taking out this supply zone, and this wick initiated the move, so I ended up taking a buy right on this wick, and we ended up taking that up, and it was a 0.9 pip stop, and I think it ended up being like 12 or 13 R or something. If that's too risky for you, the thing to do would be to wait for a second supply to fail, and that happened right here when this supply failed, and that move initiated from this wick here, so you could have bought from that wick as well. And all a change of character is you're looking to sweep these lows, and then you're looking to sweep these highs of this supply. And then you're basically looking for supply to fail and demand to take control. If you're not sure if that's the area to do it, you can wait for a second supply to fail, and it does with this leg up, so you could take another buy off this area, ultimately giving you the same trade. Now, I ended up putting a sell limit on this wick and this wick, and I ended up catching a short like 4-hour trade off this doji here. I left this order on too, and this is kind of the downside of trading three pairs. I hadn't totally forgot to go back and look at my 15-minute, but what we had formed is relatively equal highs, and anytime you get that, and I was trying to sell off this wick, anytime you get relatively equal highs, they usually get run. They're used as inducement, and yeah, I unfortunately missed that. I wasn't too upset about it since we already had two trades on the day on EU, but ultimately it ended up coming higher, and the same thing happened. We tapped into a higher time frame supply. That's your inducement, and you could have ultimately sold back down from here. um, and I tried to buy this back up too in case it went higher and the bullish trend continued, and I broke even on that as well. But same thing again, you could say this wick here, if you look on the seconds, there's your last sort of demand in there that pushed prices higher. The move that took it out is right in here. So if you pulled this white inside bar here and pulled it across, and you'd get in on here and sell back down. I didn't catch that. I did try to take a flip back down, but let me show you guys another example of inducement. So you have relatively equal wicks. You have all this inducement here. And by the way, at this point, our structure has failed. So this was my structure point. So at this point, we became bearish, and we're no longer looking for buys. We are now looking for sells. So this would have been London session. I don't trade London, but they had a pretty nice setup. You come grab your inducement, you tap your 15 supply, and you continue on down. And if you just take a look at what's going on here, supply is in complete control. Every time we come into a supply, supply has been holding, and back down it goes. If it does break a supply, it just went to the next supply to grab liquidity, because usually we create pockets of liquidity. We go to the next supply up, we grab, and off to hell. So in this example here, London's trade, let's just show you guys how it played out. A little bit slow. This is why I'm trying to get it working on my desktop since I have a mouse. But anyway, so London's trade would have been this. So you're kind of looking at the last point of supply, and there's a couple ways to do it. You have a supply here. There is actually a demand here on the seconds, kind of like sell the buy wicks from this wick, and you could have shorted right from here. Or if you don't have that, what you have here is this wick is also a demand, and it put in your last high. So you could say the highs that were swept, and then when this came back down, the lows were swept. This would have been your last source of supply that swept this low. So this would have been probably the easier one to catch, and you would have sold back down off that. And that's again your supply to demand flip and your change of character. In case you missed that, you had another opportunity here. And if you just look and pay attention, generally it creates little pockets and it leaves liquidity in there. So in this case, you have liquidity and you come back and you tap to the area that broke this structure and down it goes. You have another little chance here. Again, this little pocket's your liquidity. And as you can see, once again, it kept on going. So I ended up, I posted this on Insta. Let's see, where did I get in here? Oh yeah, so there was one more sell opportunity here. Same deal again. You can see inducement. We came and swept it. Um, and you got one more short opportunity here, depending on who your broker is and if you're taking orders on the whole block or you're front running your orders, or if you're like me, you're on the 25% mark, you probably would have missed that, and that's totally fine. You could have got in here again as this demand here failed. This supply here caused the failure, and you could have got in off these wicks right here as well. To me, I ended up taking this sell and this buy. The reason I took the buy was we had a flip where we swept these lows, swept these highs. When we did this, we came back up. I wasn't sure if the news was going to go up or down. And obviously, we took the sell to go with trend, and we took a buy just in case it went up. And yeah, one of them worked out. And anytime I trade news too, I don't hold these for long because I don't know if it's going to run, 10, 15, 20 pips and turn around because news does some weird stuff. So I don't ever recommend holding these. Now, just to give you guys a little example of inducement, there was a really good example a week or two back here. And I actually took this short and I was able to frame the short up based on looking at the order box and inducement. And I was able to figure out which ones we're going to hold and which ones we're not. So as you can see here, we had some, so we were currently making lower lows. We came in, we made this low, and then I had come to the charts around this time, and I started looking at this, and our only unmitigated order block to me was here. And I ended up actually catching that, and I'll show you guys what the 1 minute entry looked like too. And it had just barely tapped it. And we even got to change a character in the flip on the 1 minute. But the reason I wasn't trying to sell off this and this and this is pretty simple. This here, when this came straight down, was a clean push. There wasn't really a whole lot of inducement there, as in like we had one clean push back. It didn't drop a whole lot of inducement. To me, this OB wasn't going to hold, which it didn't. We came right through it. I knew this here wasn't going to hold because everything in here has been swept by this, and we had made a low. So if the inducement has been grabbed and it made a new low, that inducement no longer exists. If an OB does not have inducement underneath it, meaning there's no liquidity sitting under it that hasn't been grabbed, it will likely fail. This OB here has been mitigated by that, so I wasn't expecting that to hold. This OB here, it was the exact same thing. All the inducement here had been gone. And if you look at where this wick came to, it came above all of this. So all this inducement was gone. And by seeing this inducement gone, I knew this OB wasn't going to hold either. And what we had here was the only unmitigated order block in the whole area. And there's inducement sitting right here. Now this high becomes inducement, and this high becomes inducement. So you have sort of three equal highs that are all your inducement. And we came and tapped that order block. Now to show you guys what that looks like on the 1 minute and how the entry looked, and that was one I actually held right down to the bottom to run this low. Um, so if we look on the 1 minute side of things, see if I can find it here. Might take a bit, but we'll get there. And I just want to show you guys this because I know a lot of guys haven't figured out change of character and how to use it properly. But that's how you can use inducement. Um, so this, no. So on my Windows, you can hold Control and go really fast. Not the case here. All right, so this was our initial tap into the OB. So show you guys how it looks and what it looks like. I know this video has been dragging on for a while, but I want to make another one for you guys about failed reactions and mitigations. And inducement more or less lets you decide what order block to use. So this is our initial tap into that supply, the only unmitigated one. For those guys that don't want to do the 1 minute entry, that's totally fine. And you could have just taken the whole 15 OB. What I look for is you have a sort of demand here. And you had a demand fail right here. So you could say you swept the highs here and then you swept the lows when this demand got swept. And that is your change of character as supply took control. This is where supply took control. That's the trade I took. I forget what it ended up being, but yeah, it was quite a nice trade. I took it right down to the bottom to run this week low. And the next video I make, maybe I'll talk about weak lows and strong highs and strong lows and more or less what's protected and what's targeted and how to pick it up. And that all starts with understanding market structure and what direction you're going to go. The higher time frame is generally protected. So for example, if 15 and 4 hours bullish and daily's bearish, chances are the daily high would be protected as we are in a bearish trend. So understanding that alone can help you get on the right side. But yeah, I'm going to end this video here. I do have a couple more videos planned, like I said, talking about which order blocks to use and strong and weak highs and lows, and when we target lows and when we target basically supplies and demands. And I'll probably get into trade management a bit too, kind of explain to you guys when to manage aggressively and when you can be pretty loose with management, hold the majority of your position. But that's it for this one, and I'll catch you guys soon.